Okay, my name is Matthew Cox. I'm a realtor in Central Phoenix, and I wanted to go over a price prediction for 2023. 2022 was a wild ride. Okay, it was something to behold. Beginning of the year, from January to June, we saw this mania, over asking, buyers were buying houses sight unseen, no inspection, zero paying for closing costs. And then in June, if you didn't lock in your rate, you pretty much got discouraged by the fact that you looked at your monthly payment, you're like, man, I can't take this anymore. And you withdrew from the market. So even after all that, Central Phoenix went up 17%. Okay, even when the second half of the year was almost ghost town, we saw a 17% rate of appreciation. Um, Now, when we project for 2023, out of all the institutions I looked at, Zelman is the only one that's calling for a negative 3% rate of depreciation. All the other ones are calling for appreciation. And on average, it looks like we're going to project to see a 2.5% rate of appreciation. So we start seeing a flattening of housing prices, which in my opinion is great. Um, I don't think it's healthy when markets move 20% year over year. I don't think it's a healthy. I think a lot of times when you see such a parabolic run like that, you do see crashes, and that's why you see so many pundits calling for crashes. But we have to look back and look what happened in 2020 through 2022. We saw all these different things converge, right? We saw the new work from home, where everyone was now working from home, so office space got pretty much um, rendered useless. And in fact, even today, Carvana is trying to lease out 270,000 square feet of office space that they just bought from University of Phoenix. And you could see the building on I-10 when you're traveling down south or north on I-10. You'll basically see a nondescript building sitting right there. And that's because our Carvana decided that, you know what, I think the best financial move is to try and lease this thing out. Now, then, not to mention, you saw a ton of marijuana and cannabis companies come in and buy a bunch of real estate. Then, not to mention the fact you saw a lot of individuals trying to tap into the Airbnb market. And then that's also talking about people who just want to invest, and then normal middle class Americans who just want to become owner occupants. So you have almost five different ways that the market was going to go parabolic. And in some ways, the interest rate hike just cooled off the mania. And in some ways, there's lots of pros and there's lots of cons. No one wants to see the middle class get hammered with real estate costs. But if we could slow down the appreciation, I think, and let everyone catch their breath, I think this is a great opportunity, especially for people who are serious about living in Central Phoenix over the long term. Now, even with buyers getting absolutely hammered in the second half with increased interest rates, we're still seeing a slight appreciation, which actually, when you look at it, it makes a lot of sense. You know what? We're going to do this over another video, but um, basically, when you do the eye test, okay, there's three ways to invest: technicals, fundamentals, and the eye test. And if you're in Central Phoenix and you do the eye test, which is you just look around and see it, Phoenix is hustling and bustling. Businesses and people are still mass migrating into Arizona, and everyone is looking for new opportunities in Phoenix. So that is not changing anytime soon. Now, the question then becomes, how come we're not seeing drastic increase in housing supply, which then in turn drops housing prices? Reason is because we do not see a gluttony of um, foreclosures. Okay, we just don't see it. For instance, nationwide, they're projecting basically less than 1%, less than half a percent of Americans will be foreclosed on, which is great news. I don't want to see anyone, even with all the insanity of increasing interest rates, I don't want to see anyone get foreclosed on. So if people are sitting on the sideline waiting for other people to get foreclosed on, I think you could look in the mirror. I don't want anybody. I lived through 2008. I don't want 2008 again, okay? And I don't want to sit on the sidelines waiting to buy a house because someone else is going to get foreclosed on. I don't think that's a good motive. But that being said, why? How come we don't see more foreclosures? What is going on? Well, number one, okay, since 2008, we saw lending practices tighten. They got there's a lot more regulation. In order to buy a home, you need a debt to income ratio, you need a decent credit score, you need 2 months of pay stubs, 2 months of bank statements, W-2s, and tax returns. Now, granted, if you just got a job, your lender can probably extrapolate your income and still qualify for a loan. But you still need all those levels of verification, income verification, in order to become a borrower. So, what does this mean? Okay, how do we characterize a borrower with these lending standards? What does it actually look like? Well, this is what it looks like. We see with these lending practices, subprime borrowers range between 580 and 619 points, which is astonishing. Okay, when I rent out an apartment, I'm almost looking for somewhere in the fives. They have a reliable job and there's no criminal record. That's basically it. And borrowers, subprime borrowers, so this is like low average, okay? Not your best borrower is what basically subprime can be translated to, and they're still 580 to 619. I think that's pretty fantastic. And current buyers, as a borrower, their credit score is 773 points. That's really high. That's great. So the quality of the borrower is has a much is operating at a much higher standard than in 2008. So clearly, these people have a high intent to buy real estate and they're not going without a fight. Okay. What does that mean? They're not going without a fight. Well, this is amazing news. So talk about black pill doomer and stuff. Here you go. This is astonishing. We basically see $43 trillion of real estate equity, peak with a trillion. These homeowners are not going away without a fight. Look at that. They're in the black $30 trillion. So of the $43 trillion, basically it's like what slightly above $15 trillion of debt of the 43. So a little bit below $30 trillion. Like that's astonishing. That's more than all the assets on like Wall Street and 401ks. So the middle class, this is the best asset for the middle class. It outperformed real estate, outperformed crypto, outperformed Wall Street, outperformed bonds, outperformed precious metals. When you talk about a safe haven for the middle class, it's their home. And this is astonishing. This is great news. So the best thing for middle class Americans during inflationary times is proving to be their home. And the data proves it. $43 trillion of that, slightly 15 trillion is debt. So it's astonishing. It's astonishing news. And this is one of the reasons why my business motto is we thrive in life by winning at home. And look at when you win at home, you're absolutely thriving in life. Your quality of life is better, your financials are better, and you actually have a hedge against inflation. So when I look at this data, I don't think a housing crash is going to happen. These high borrowers in 773, do you think they're just going to just sell their house because they're scared? They're not scared. These people struggled to get it qualified for a loan to buy this house. They're more astute. Homeowners are more astute than ever before. We outperform so many different investors on Wall Street just by buying a house to live in. I mean, bravo. This is great news. So step away from the black pill doomer stuff. Take a fresh breath air. Breathe in the fresh air. Okay, that's all I'm trying to say. Look at the stats. This is great news. I don't want a housing crash. I don't want people to get foreclosed on. But guess what? I can definitely help you run numbers and take a look at whatever's going on in Central Phoenix. So enjoy the data. It is not 2008. Okay? So I'm gonna keep you guys posted. I'm boots on the ground for you here in Central Phoenix, and I have a lot more content on the way. So thanks a lot for watching. Have a great day.